Welcome back to the Catalyst Clock. Quick note, not financial advice, we're not licensed advisors, educational analysis only. Palantir is down as much as 38% from its all-time high. And this month alone, it's up roughly 11%. The stock lost ground last month as investors continued to punish AI software companies, with concerns about a UK NHS contract non-renewal and short seller commentary contributing to the sell-off, but it's seeing significant recovery in July amid multiple bullish catalysts.
So which version of this story is real? Let's find out.
Here's the fun fact most people don't know. Palantir named itself after an old fantasy legend about magical stones that let you see anything, anywhere in the world. This month, that name feels almost too on the nose.
Because the U.S. Army just chose Palantir's Foundry as the core cloud data layer for its top modernization effort, NGC2, as the program shifts from prototype work to wide deployment. That's not a pilot program anymore, that's the Army standardizing on this company's software.
And it's not just defense. A new Palantir Nvidia initiative will run Nvidia AI and Nematron models in secure, sovereign environments for sensitive U.S. government and critical infrastructure workloads. Think of Palantir as the control room, and Nvidia's chips as the engines being plugged into it.
The underlying numbers back up the hype. Q1 2026 revenue came in at $1.633 billion, up 85% year-over-year, a massive acceleration for a company already operating at multi-billion-dollar scale.
And this isn't a cash-burning story. Gross margin sits around 84%, with EBIT margin near 41% and profit margin above 43%, while operating cash flow hit about $899 million for the quarter. This is a company converting contracts into real cash, not just headlines.
Wall Street's noticing too. Wedbush has reaffirmed a $230 price target, D.A. Davidson just upgraded the stock to buy, and analysts have set a median 12-month target around $200.
Now here's the part that should make you pause before getting excited. Palantir's trailing P/E ratio sits around 131, among the richest valuations of any company this size in the market. You are paying an enormous premium for this growth story.
And the bearish case isn't just it's expensive. Famous short seller Michael Burry has publicly argued that Anthropic is eating Palantir's lunch in the AI race, and reaffirmed his short position last month, though more recently, Burry has trimmed that short bet, which itself became a bullish catalyst for the stock.
There's also a real, specific risk most retail investors haven't priced in. Palantir is facing political pressure in the UK over its roughly £330 million contract to operate the NHS's federated data platform, and a UK parliamentary committee has already recommended against renewing it. That's a real revenue line at risk, not just sentiment.
So, down 38% from the high, up 11% this month, trading at over 130 times earnings, backed by the Army and Nvidia. Where does that leave us?
I'd call this a 6 out of 10. The government and AI infrastructure story is real and accelerating. This isn't hype without substance. But at this valuation, you're not buying an undiscovered opportunity, you're paying a premium for a company that has to keep executing flawlessly, quarter after quarter, with zero room for a stumble like the NHS contract. This is a watch the next earnings report closely stock, not a close your eyes and buy stock. Next earnings land August 10, 2026. That's the real test. A company whose entire business is watching everything, and the people who regulate it are quietly trading its stock. Make of that what you will. Subscribe for the next one.